This is FX Insights with CIS Trading. I'm JC with your August 19th, 2019 Doxometer report. From 3.5% yields and 0.5% real capital risk with US dollar risk at 4%. We've moved over the last month to negative yield spreads with 4% real capital risk and US dollar risk at 1.5%. Now yields are currently trading at 1.5%. with real productivity standards for inflation at 5.16% in the markets, and bonds flat on premium. Markets again are nearing negative yield spreads, potentially 1.25% on the yield, and 110 or $1,000 premium on the bond. 1 month volatility in U.S. capital structures are demanding 3.86% economic productivity in the S&P index and 5.11% in total performance on capital every day. The return on capital for the S&P index is at 4.75%, which is 4.25% less than the real performance standard of 9%. The focus is on real return on capital in the capital structures with Doxometer Dollar Index Profile in focus. So all eyes on the Dixie Chick with the Queen of the South rising up. The current trade value is 97.16. Strong performance against a prior week trade value of 93 that exposed nearly 7% of risk in the US dollar at work in the economy. So the current trade price at 98.2 is weakening just a little below the core value of 98.75. We have a key trend level of 97.97, showing consolidation above that 97.97 level with a US dollar risk at 1.8%, and that's nearly 0.5% lower than the previous week US dollar risk. The US real inflation productivity standard of 5.16% combined with that US dollar risk places us at about a 7% total risk on the dollar at work this week. The US dollar performance is very low at 17%, demonstrating non-performance in the economy. With the foreign exchange US dollar ratio at 348% on the CIS CCT Doxometer, this signals a real performance value for the US dollar in the capital structures where economic principle is traded in currency exchange. This would improve US dollar performance to potentially 59%. The US dollar efficiency rating is currently 76%, simply wanting a return on capital. And the economic challenge in the S&P index is shares over issue. Share dilution based on quorum capitalism theorem prevents any real market performance in the indexes. Bearish on value across the board. A capital structure within individual corporations and shareholders needs to be resolved. Focus only on non-diluted shareholdings. Do not invest in overissued corporations. Indexes signal no growth in the broader market, but Doxometer values show awesome opportunities with greater than 50% growth potential on non-diluted, high return on capital shares. So guard against any shares where labor is unionized or fixed with high overhead and lower return on capital standards. Ultimately, the capital structure based on quorum capitalism theorem needs exchange in foreign exchange markets to mitigate capital risk and overcome high performance standards and real productivity standards of inflation. So the best performance of capital is expected to be in the higher leverage markets, providing a multiplicity of trading opportunities. What CIS CCT is looking for are 9 to 13% return on capital this week. 9-pip trades exceptionally numerous across the market. Exponential returns up to 19.5% possible in accounts leveraged at 54% on total account capital. And that's what's really trading now with Doxometer from CIS Trading. I'm JC.